Welcome to The Explainer. Today, we are digging into one of the most unbelievable boom and bust stories in modern history, the dot-com bubble.
I mean, really think about that for a second. How can an idea, just an idea with zero profit, be worth billions? Well, that was the big question back in the late 1990s, when a brand new technology was about to completely change our world and the stock market along with it.
Okay, so let's get right into it. This is a wild story about how a single spark of innovation lit this absolute firestorm of investment. It created a frenzy that promised a whole new world, right before it all spectacularly went up in smoke.
So, part one, a new digital frontier. You gotta understand, this was the perfect storm. All the ingredients came together at just the right time to create something nobody had ever seen before.
The real spark? It was a piece of software called Mosaic. It was the first web browser that was actually easy to use. And just like that, the internet wasn't just for scientists anymore. It was for everybody. And as computer ownership literally doubled, this huge, unexplored digital territory just opened up. It was a frontier for a whole new kind of business.
And right on cue, this tech revolution was met with a tidal wave of cash. Interest rates were low, which means money was cheap, and investors were absolutely desperate to find the next big thing. Well, the internet was it. Venture capitalists just opened the floodgates, kicking off a new kind of digital gold rush.
Which brings us to part two, the get big fast frenzy. Because in this new world, the rules were totally different. The motto was simple. Clicks were way more valuable than cash.
And the result was just pure mania. The tech-heavy NASDAQ stock index shot up 400% in just 5 years. Can you even imagine? Everybody was gripped by this intense fear of missing out, FOMO. Investors were just throwing money at any company that had a .com in its name, and their values went to the moon.
This quote just nails the mindset of the time. This wasn't some blogger saying this. This was the Wall Street Journal. They were questioning the, quote, quaint idea of profits. The thinking was, in this new economy, all the old rules, they just didn't apply anymore.
So if profits didn't matter, what did? Well, they basically invented a whole new set of metrics. It wasn't about what a company actually earned. Nope. It was about how many eyeballs you could get to your website. And the burn rate, how fast you were spending all your cash, that wasn't a bad thing. It was seen as a sign of ambition.
And all this led to this simple, kind of dangerous playbook. You see, the goal wasn't to build a business that was, sustainable or profitable. The real goal was to get your brand name out there as fast as possible, no matter how much it cost, and then cash out with a gigantic IPO.
And that brings us to part three, when the bubble burst. At the turn of the millennium, the party was going strong, but a really harsh reality check was waiting right around the corner.
And when it unraveled, it happened incredibly fast. In the spring of 2000, right after the NASDAQ hit its absolute peak, a series of shocks just slammed the system. A recession in Japan, a big article in Barron's, a landmark ruling against Microsoft. Confidence just evaporated. And by Bleak Friday in mid-April, it was a full-blown panic. Everybody was selling.
The collapse was absolutely devastating. Over the next 2 years, the NASDAQ just cratered, losing 78% of its value. An estimated $5 trillion in market value just, poof, vanished into thin air. But it wasn't just about stock prices. Here's the crucial thing. That whole pipeline of easy investment money that all these companies depended on to survive, it just completely dried up. And without that constant flow of cash, hundreds of these businesses that had never, ever turned a profit were suddenly left completely exposed.
And now our final section, Aftermath and Legacy. Yeah, the crash was a disaster, but out of those ashes, a new, much more resilient digital world was about to be born.
This shakeout created a really clear divide. You had these high-profile flameouts like Pets.com that became legendary cautionary tales. But then you had companies with real solid business models. Think Amazon, eBay. They survived the nuclear winter and grew into the tech giants we all know today.
But here's the great irony of the whole crash. All of that money that was supposedly wasted, turns out it wasn't really wasted at all. It built this massive physical backbone of fiber optic cables and high-speed networks all across the country. In a weird way, the crazy excess of the boom actually laid the groundwork for the next 20 years of internet innovation. And this quote, from a venture capitalist who lived right through it, gives you a powerful way to think about it. Maybe the mania, as painful as that crash was actually a necessary, chaotic step to finance a technological revolution on a global scale.
And that leaves us with a final question. When you look at today's technology, the sky-high valuations, the incredible hype around frontiers like AI, you have to ask yourself, how much have we really learned from the past? Is history just repeating itself, or is this time truly different?